is another one we can talk about if you want.
Sorry, which one?
Caxton.
Impact.
Impact. Yeah.
Okay. Right. I'll do the little sting and then away we go. Well, it's Thursday night, and that means time for Piet Viljoen to shake us up again. Cheapers, Piet, that story you wrote for BizNews on, sorry, not the story, but the interview you had on not buying a house. Why buying a house in South Africa is a bad idea. I think the estate agents must absolutely hate you, but certainly our community loves you. There are tens of thousands of people who've been downloading and reading that story.
Yeah, look, I mean, I've worked it out on spreadsheets as being a financial analyst. That's what I do, and it just doesn't make sense. It can make sense for two reasons. One is emotional security. One understands that that some people find value in owning a home and the security it offers you, and that's an intangible value which you can't quantify. And some people have that, so there's that. The other thing is you can leverage. You can. It's one of the assets, one of the very few assets banks are willing to lend you money against. However, that only works if the value of the asset goes up over time, and that's not always the case, especially in South Africa, with a lot of our municipalities going backwards, pulling down property prices with them. That could be a problem.
So leverage is the big thing. In other words, if you're going to gear up for something, you're going to accelerate the upside or downside. And in
Or
this
downside.
case,
Yes,
the leverage
exactly.
is not a good thing. So
Exactly.
are you telling me that the house that I bought when I came back to South Africa after 3 years in the UK, the money would have been better spent left in the bank?
Well, no, I don't think it's better spent left in the bank. I think one needs to own assets. I just think there are better assets to own than homes or houses or property. I think there are many companies listed on the JSE and internationally that grow despite the economic environment in South Africa and because of the economic environment offshore. Pay dividends. It's not like you have to phone your tenant and say you're 3 days late with the rent, please pay me. You get your dividend check every 6 months or 3 months, as the case may be in the US. And it just pops into your bank account. And it's clean and easy and simple. Yes, sometimes companies skip dividends because they go through a tough time. But that's just like losing a tenant in a house and he moves out and it takes you a year to replace the tenant. It's the same sort of thing. So I actually think equity is a much better asset class to own over the long term than property. It's just for building wealth.
But for you personally, you don't own your own home then?
I don't. No, I rent.
And how aren't you scared that the guy who owns it is going to come to you at some point in time and say, move on?
Well, when the lease comes to an end, yes, they have the option to do that. But I have signed a long-term lease, so at least we know we're there for 5 years. And you never know what happens towards the end of the lease. Maybe we want to downscale, upscale, rescale. It gives you lots of flexibility. Maybe we want to move to a different neighborhood. Maybe we want. So it gives you lots of flexibility as well.
I take it you're not coming up to live in Johannesburg just yet, though.
No, not quite yet. No.
Well, someone who lives in Johannesburg who's done very well, and you, one of his fans, is Christopher Seabrook with Sabvest. Financial results out today. Very good. You told us at the BizNews Investment Conference, sure, it feels like a lifetime ago, but it was in March this year, that you tipped that share or recommended that it goes into one of those bundles. Those who purchased it will be very happy with you. Are you comfortable with the progress at the company?
Very much so. I mean, if you look at the track record of Sabvest and specifically Christopher Seabrook's track record in managing the assets of Sabvest, he has by far outperformed the all-share index in terms of the returns he's been generated, in terms of the growth in NAV per share. By far outperformed the all-share index. And you are able to still purchase this at roughly a 35% discount to NAV. So, the assets are being discounted, and these are good assets that have shown the ability to grow at high rates over time. So I think it's a win-win, and remains so, even though the share price is up by, I don't know, probably 20-25% since we spoke 6 months ago. But I think there's a lot more to come over the next 5 to 10 years from Chris and Sabvest.
What else has caught your eye lately?
Well, one of the stocks that I spoke about, those twigs. When I put the portfolio together, I think I've spoken of each individual stock is a twig, quite a brittle, easy to break twig. But if you bundle them together and tie them together, it creates quite a strong element, and that's how I look at a portfolio. So, we can talk about specific stocks, but I'm wrong or right on any specific one. But altogether, they make a strong portfolio. Another one we did speak about, which was Caxton, which was trading at below net current asset value 6 months ago. In other words, you could liquidate the whole business, pay off all the liabilities, just using their current assets, ignoring their long-term assets, and still have money left over. Since then, the share price has gone up, and it looks like they are making a play for Impact, the packaging recycler here in South Africa. So it's interesting. They're using their business that generate lots of cash, but which are effectively dying businesses. They're using that cash flow to reinvest into another business, which might give them a longer term lease on life.
Is it a good business, Impact?
I think so.
One they can turn around?
I think it's a good business. I think it is a large line of business, packaging recycling, and I think recycling is the way. And if you walk into Woolies or Shoprite these days, you buy anything there, it's packaged to the hilt. There's lots of packaging happening there, so there's lots of recycling to happen as well. So I think it's a good business, and it could have growth prospects. So yeah.
Caxton is, of course, Terry Moorman's company.
Yes.
He's been around the block a long time. He knows what he's doing. He wouldn't be making a takeover offer if he didn't know exactly what the assets were that he was acquiring, and that they were at a very good price. So which of the two would you be going along with? Presumably Caxton as the acquisitor.
Yeah, so Caxton is still trading at quite a low valuation relative to the asset value of the business. And if the acquisition is successful and turns out the way Terry, who's a good businessman, thinks it will, then I think you'll make money on at the Caxton level.
Talking about another company that's trading below its asset value, or presumably, is Tongaat. It's had a good run in the last couple of days, gone from R7.70. In fact, when we did our BizNews webinar, it's in our portfolio, but we bought it at R10. And it's gone from R7.70 to nearly 10, back to nearly R10 again. Is there something going on there that we're all missing, or is it just a reassessment?
I think it's a reassessment. I think a lot of these businesses like Tongaat that got into trouble, their share prices went to very low levels, extremely low levels, where there was antagonism, where there was hate, where there was dislike, distrust, all those things baked into the share price. And then, as they start recovering, as they get management in who starts right-sizing things, who starts getting the train back on the tracks, the share price starts acknowledging those efforts of management and possibly starts accruing or according more value to the assets that are on the books already. So that's a process that's happened with many companies like Tongaat. As you know, South Africa has had quite a few scandals over the past few years. Scandals always tend to come out in tough times, and we've been going through tough economic times in the past 3-4 years. So we've had quite a few scandals. And many of those shares have rebounded quite sharply from their low levels. Tongaat is one of them. So there's probably a lot of stuff going on there that we don't know. A lot of restructuring happening, a lot of repositioning happening, a lot of refinancing happening. But when the results come out shortly, then we'll know a lot more. And I think they have postponed the release of the results, possibly to do with most likely to do with IFRS and adjustments. But I wouldn't worry too much about that.
And Piet, just to close off with, we're now back in a heavy lockdown due to the third wave of COVID-19. That hasn't been good news for many industries that have been holding on almost by the
skin of the teeth.
fingertips. Skin of the teeth.
Yeah.
Are there any companies that we now need to be really worried about that they just can't get through this last little bit? I hear stories about Sun International perhaps looking for yet more money from its
Yeah.
shareholders, and as an example.
So I do think if you went into this with a lot of debt, if you didn't use the last 6 to 9 months to get your financial house in order, and you went into this with a lot of debt, it could tip you over. It's quite possible. I wouldn't want to speculate on Sun International whether that will happen to them or not. I know they have quite a heavy debt load. But the other thing one has to say is that these businesses, like Sun International, like Tsogo, like Lodge, they've always also learned how to manage their businesses with a much lower cost base and in line with government regulations and maintain the business. So they've learned from the previous lockdowns. This lockdown hopefully is only 2 weeks. I think most businesses should be able to. It's tough. It pushes out what you wanted to do by another 2 weeks or a month or however long it takes. It's hard, but I think most businesses will have learned from previous lockdowns and are facing this one with a bit more confidence.
But what about smaller businesses like
Mm.
restaurants
Yes.
who now have no more patrons, and not because they're not allowed to bring patrons in? I guess they can still do takeaways. We're going to talk to Grace Harding in just a moment
Yeah.
from the coalface, but uh, that must be a really tough place to be. And are there listed companies that would be
Yeah.
exposed?
Super tough. I think there are very few listed companies that we've exposed. The listed companies more Spur would be an obvious example, but Spur does a lot of takeaway as well. So they'll be able to, and they're financially strong. They'll be able to do the 2 week period. Famous Brand does mostly takeaways, which won't really be that affected by this. And so they will be able to see it through. So I think they're okay. It's the mom and pop shops that are the main problem. It's not really in the list environment. It's the neighborhood shop, the mom and pop shop, that enterprise that has 2 or 3 people working there. Those are the ones that I feel very sorry for, and that are really facing some tough times.
Well, there we go. Thank you very much.